call to order this evening's Finance, Personnel, and Operations Committee. It's Thursday, May 12th at 6:05 p.m. The record can show that the three members of the committee, including members Youssef, member Figdor, Chair Figdor, and myself, are present. We'll acknowledge now, I think it's still to be true, that Chair Figdor sends regrets that she'll have to depart a bit early to attend one of her kids' recital this evening, and totally support that endeavor. And with that, I'll turn it over to you, Superintendent, to take us away.
Thank you, Chair. So we have a pretty full agenda today. We have we're operating as the Finance, Personnel, and Operations Committee, and so I think you have a little bit of everything on the agenda today. We're first going to spend probably the bulk of our time today, because it's the one item that must happen, and then the others are more informational. Then there's no action required from any of these, but the others are less sort of timely. But the budget, the finance portion of this is reviewing our quarter three year to dates, and Kathy is going to walk through that. There is a substantial memo in the packet that she'll walk us through, but you can refer to as well. And then we're going to talk about the audit that is not quite finalized. So it's not a it's not a final audit. I think we were expecting that by the end of this week, so that would mean tomorrow. But we don't expect that there's going to be substantive changes from it. And so we wanted to walk through it. And the final section then is, sort of beginning to address some of the concerns that you'll see in the audit report that are of a, more of a personnel and organizational, obviously have budget implications as well, but that we wanted to spend some time on. And then after that, we wanted to talk to you a little bit about some changes that we're going to be making in our sort of our categorization of schools for food service purposes. So I'll walk through, what we're doing and why we think it's important to do this. And then the final item is very much just a quick update on some IT conversion collaboration with the city that I just want to make you aware of us doing that. So with that, I'm going to turn it over to Kathy to walk through the quarter three report.
I should probably come off mute. So good evening. This is the quarter, this is cumulative through quarter three. So it's a cumulative report, and many of the comments and the analyses that were part of the last quarterly report are continued here. So I can go into as much detail as you'd like, but for now, I think I'm going to highlight most of the changes or the any aspect that is new for relating primarily to the third quarter. So this is for FY22 through March 31st. And as we've discussed, we've used some federal funding to cover some pandemic-related costs this year. And this report primarily relates to the general fund revenues and expenditures that make up our local budget. So there is also a summary at the end of the narrative that will show where we stand with actual expenditures compared to actual revenues. But I thought that we would start with wages and benefits, which represent our largest costs. And we are running below budget as of 3/31/22, but we will be charging pay earned during the school year, but that's paid out during the summer months to FY22 at the end of this fiscal year. And at which point we will be closer to budget on the expenditure side. So that's a little deceptive that we have the July and August salaries that were paid upfront in FY22 were charged to FY21 if they were earned during FY21, and we'll be doing the same thing at the end of FY22. Otherwise, our benefits and our salary and benefits are pretty much on target or where they're expected to be. However, we increased, as you might recall, we increased the FY22 budget by $1.3 million, and that was for the custodial salary and benefits that are being charged to the federal SRF 2 grant right now. But they're budgeted here, but they're being charged to SRF 2. And that was in an effort to minimize the budget impact at the end of federal funding and to build our fund balance. And then as I'm going through this, contracted services, our utility payments look like they're still, for our water and sewer, they're still below budget. And that's primarily due to the timing of expenditures. So we're still continuing to work diligently to process payments on a more timely basis with the addition of a new accountant and some improved accounts payable processes, which are still in progress. And our supplies, we have food service supplies are currently above budget at 82.5%, and they're expected to end the year over budget. Our general and custodial supplies are below budget, and part of that reasoning is the pandemic-related supplies are being charged to the federal funding. And our fuel and electricity also reflect the lag in payments, and we're also working diligently to process those payments on a more timely basis with the addition, again, of the new accountant and the approved accounts payable processes, which are still in progress. The other costs are pretty much the same. They're in the same schedule as they were on Q2. So I didn't see anything that I thought would be of particular interest or concern for cumulative through Q3. And on the revenue side, our local revenues are on target. And we did receive, many donations of goods and supplies for pandemic relief, but our miscellaneous local revenue is still below target. But you'll notice that there's a large amount that is included in that, and that is $291,267 was related to the sale of old laptops that has been recorded here as a placeholder for discussion. So the proposal is to reserve these funds as part of our fund balance surplus funds to use for replacement of IT devices in subsequent years. So if these funds aren't reserved for a specific purpose in FY22, they'll flow into our unappropriated fund balance for general use. But it looks like our local revenue is above budget because I actually put these dollars in here so that we could discuss reserving them. And on the state revenue side, our state agency client revenue is still currently below target, and we expect that we'll end the year along those lines. Everything else seems to be as reported for cumulative through Q2. Adult ed, our tuition, both our individual vocational tuition and our other academic tuition is still below budget, primarily due to the pandemic, and that is expected to remain the same throughout the year. And on the food service side, federal revenue, we did receive some unanticipated supply chain assistance relief funding, which is referred to as SCA. That was $115,000, and that was to help address, that's federal money that was helping to address the ongoing supply chain challenges during the pandemic. And this money was discussed earlier in the section in the narrative, that while it is additional funding, it'll be used to offset the additional expenditure costs that are expected to occur. And the extent of that additional expenditure costs will be provided by the food service director, which I can report back out to at a later date. So the last page of the narrative shows a snapshot by fund. where we have our balanced budget for each of the funds, the general fund, food service, and adult ed, and where we stand actual revenue compared to actual expenditures. The difference isn't necessarily reflected here because we aren't through our year end. So I think it may be a little deceptive to show that our revenue is well above currently our expenditures, but that's because of the timing of when the revenue comes in and when our expenditures will be spent. We still have 3 more months of expenses to record for the FY22 year. And we'll be much closer, I predict, to our revenue numbers here than current. But this will show the percentage that we've received on our revenue and the percentage we've spent on our expense side, both for all of the funds and as in total. And those numbers are reflected in the last 2 pages that actually show the financial results, the numbers for each category. So I don't know if there are any questions. I was just trying to highlight anything that may have looked a little different from the first 2 quarters.
Any questions from the committee? Go ahead, Chair Figdor.
Thank you. Kathy, thank you for all this. I was wondering if you can give us a sense of, clearly we have a last quarter of the year to go, but give us a sense of where we might be overall.
I haven't had a chance to complete that analysis, Emily. I'd really like to be able to provide that to you, which I hope to do before the end of the year.
Okay, fair
but
enough.
I was trying to get that done for this meeting, and I wasn't able to do that. I apologize.
No, fair enough.
And we'll mention that it's also very difficult to do at this stage because we do a lot of the spending does occur in the last quarter of the year.
Can you say a little bit more about that, Kathy?
Well, I think sometimes we're just catching up on some of the invoices that haven't been received from some of the schools at the end on the last quarter. So a lot of that, not that the spending necessarily is occurring all in the last quarter of the month, but a lot of the payments for those services and things are coming through the last quarter, especially the last month, like June, to make sure that everything that is applicable to the FY22 school year is being processed in that year. And that's where some of the difficulty comes in. It comes in kind of heavy. So some during some periods, it's a little bit lighter with the spending than now. So, but we have controls in place in the system so that it doesn't allow for over expenditure. So that is typically not as much of a worry. It's just the timing of when the expenses come in.
And just one question. In the memo, you talk about estimating $18 million in salaries between now and the in the end of the year. Is that, so is that deducted from the regular salaries is what you expect?
So the summer salaries that we'd be accruing at the end of June for that apply, they earned in FY22, so we need to charge them to FY22 is going to be, my estimates, original estimates, like close to 13 million.
But what is the 18 million in the memo? That's what I'm trying to fully understand. So it's
so 18 million was removed from FY22 and put to FY21 at the beginning of the year. And now this is what we're projecting will be the summer salary. That was summer salaries for FY21. The 13 million is the summer salaries for FY22. I say FY22, it's July and August of FY20, it'll be FY23, but we're going to charge them to FY22. So as best as I can determine, the estimate's going to be closer to 13 million for this year of what we would be charging back to this year. So right now through third quarter, this does not reflect any salaries that were earned in July and August last year. And then at the end of this year, we'll be adding salaries that were earned this year, paid next year, in this year, if that makes any sense. But that's what we're doing. And it's a little bit different approach than what we've done in the past.
Yeah.
And more in line with best practice.
I have one question, but first to Yusuf, do you have any questions? Oh, have I frozen?
No, we can hear you.
No?
Oh, okay, great. I'll go ahead and just ask my question. Kathy, thanks for this information and highlighting what you have. From your perspective, is there anything of particular concern to you?
Not that I saw at this stage, no.
Great.
No, this seems pretty consistent with what we've seen in the past, or my past, which was last year.
Yeah, I'm glad to hear that. I think the utilities piece is the one that sounds like we have something different in place to start addressing that, but that of course hasn't
caught up yet. But we've caught up significantly, but it hasn't caught up as far as the payment schedule. So we'll see that reflected by the end of June for sure.
Yeah, great. Okay, no other questions from the committee?
I have a quick question. So you mentioned the water and sewer is below the budget, but the food, the supply food is above the budget. I mean, the general custodian is below the budget.
Yes. So the general and custodial supplies, I think, are running below budget because we've charged some of that to the pandemic, to the federal funding due to the pandemic. And the fuel electricity is still kind of along the lines of the utility spending that we're lagging behind in. So we're trying to catch up on our payments. So it's more a reflection of the timing, not that we expect to be below budget at the end of the year. We don't. We're just behind in our payments.
Because of the constant use and the bills that we are going to see.
I'm sorry, I can't hear you quite.
Yeah. Is it because of the continuing using the utilities and the bills that we're waiting, or? Maybe it wasn't clear.
No, I think we just got behind in paying. We've received them. We just got behind in paying them. And I think with all the federal funding spending that we've needed to do in the past, or just recently in this year, that we got behind in paying some of these other bills that need special attention. And so we're focusing on that. We have been for a few months now.
We're going to be talking about some of the departmental process work that needs to happen sort of in the next section when we talk about the audit.
Any other questions, Mr. Yusuf?
No, I'm all set, Chair. Thank you.
Okay. I just have one more. Did you need further conversation or action this evening related to the IT funds? No, that was just a heads up that's there and a question that we're living. Okay, great. So it seems we're okay to move on.
Not at this juncture.
Great. On to the audit.
Kathy?
On to the audit? Okay. Okay, you're welcome. Okay, so this is the management letter that was also part of the packet. And we have new auditors this year. And they have come up with 5 issues that they believe required comment this year. And some of the previous issues that they have come across, they kind of included into one comment for this particular year because we were running so far behind too with our audit and getting everything. So as opposed to reiterating everything that was issued in the past or every comment that was issued in the past, they've pretty much put it into these 5 categories, 3 of which are specific to the school department. And so the first one is considered a material weakness, which needs to be addressed. That is a lack of segregation of duty. And I can read this. Would that help before I read the response? Or I know everyone can read that themselves, but
what would be helpful for us to put it up on the screen for everyone to see, and for Kathy to just point to sort of relevant paragraphs. I wonder, Kathy, if you could just spend a minute talking about what is a material weakness, what is a significant deficiency, since I know that this may be the first audit for Member Youssef, but I don't actually know how versed in those terms any of the board members are, or members of the public who might be listening.
So a deficiency, I can read part of this. A deficiency in internal control exists when the design or the operation of a control doesn't allow management or employees in the normal course of performing their assigned functions to prevent, detect, or correct misstatements on a timely basis. So that is the risk that something will happen and we don't have enough internal controls in place to identify it and to correct it in time. So a material weakness is a deficiency or a combination of deficiencies in internal control such that there is a reasonable possibility that a material misstatement of the financial statements will not be prevented, detected, or corrected on a timely basis. And a reasonable possibility exists when the likelihood of an event occurring is either reasonably possible or probable. As defined, they have reasonably possible as the chance of the future event or events occurring is more than remote but less than likely, and probable is that the future event or events are likely to occur. So when you have internal controls in place, even if you can't prevent an error, because that's not necessarily the intent, but the intent is to make sure that you can at least detect it so that you can correct it in a timely basis. And that's mostly what they're looking to see, if we have controls in place that will at least allow us to detect and correct any deficiencies or material weaknesses that they come across, not that anything has occurred, but if it were to occur, to make sure that we have something in place to make sure that it doesn't continue on for a length of time and that it is easily and quickly identified and corrected. So that's what they're primarily looking at. And they did become aware of some matters that they believe give us opportunity to strengthen our internal controls and our operational efficiency. And so that's what they're referring to here in their recommendation section. Mm-hmm. So a significant deficiency is a deficiency, and it's not enough for them to mention that it's a material weakness, but it is noted as something that we need to be aware, we should be aware of, and we are.
So any question on those definitions before we actually dive into the material weaknesses and significant deficiencies that were flagged? Seeing no, okay. So why don't we move on, Kathy, to the first one of the recommendations, which is the internal control structure, which is a material weakness.
Okay.
Maybe just help the board to understand what that, what the material weakness is, and then what our response is to that material weakness.
So the school department's internal control structure, they view as a material weakness. It's a lack of segregation of duties that exists as all school finance staff have actually access to modules within the Munis system so that changes can be made, unauthorized adjustments can be made by personnel, and errors or irregularities could occur and not be identified timely. So they're specifically saying that invoices may be posted for payment without appropriate review or authorization, and that pay rates can be adjusted by individuals other than human resource personnel, and that journal entries can be posted without appropriate documentation. And they also...
Questions on that?
There needs to be a check and balance. There needs to be oversight over the transactions that are being processed. That's what they're referring to, that there needs to be separation so that someone cannot, for instance, enter an invoice for payment and then actually cut the check.
I'm going to stop sharing for a moment so I can close the chat, which I opened to see what was in there, and now I can't reach it because I have something over it.
While you do that, Chair Figdor, and then remember you.
Yeah, I was wondering if, Kathy, you could help me understand, in their description of the material weaknesses, it seems like some of this are structural problems, but I guess my confusion is why these weren't identified in the audit last year, for instance. So what is different this year? Because like I said, as I'm understanding this, a number of the issues they're raising are really structural in terms of how we set up the department.
That may be true. It may be the way that we've set up the systems too. And honestly, I don't believe that anything here is new. I think they're just different auditors. And so they've presented it in a different way, but what they're saying is the same as they've been saying. That they said last year, and they didn't reiterate every single comment from last year's, but they kind of rolled it into one here. So they're kind of talking about this in maybe a little bit broader sense, but the issues still exist. And I think because the audit has closed so late into FY22, we haven't been able to have a lot of the resolution of this, and we were also hoping to work a little more closely with them on making some of these changes occur, but because of the timing, we're still going to go into next year before we have a lot of this hopefully resolved. But I do not believe that any of this is new. There's nothing that's changed significantly with structure. It's just the way that we've been operating for a while. And this just highlights the need for some changes to be made, which we are working on, but it is going to be slow.
And then my just follow up on that is how much of this was due to challenges with staffing, I know it's been very challenging to staff all of your positions. So just trying to understand how that's played into this.
This is more, if I can be honest, this is more of a systemic cultural thing, I think, than just, and the fact that we have been short-staffed. But just changing mindset on how we process and do business.
Okay, thank you.
Member Youssef?
Thank you, Chair. Thank you, Kathy. I have a quick question about the pay rate can be adjusted by individuals. Does that, other than the HR, does that mean someone works under the HR, or is the actual adjustment of the rate?
Well, in other systems I've worked with, the pay rates can only be entered by HR, not by payroll. The payroll personnel should not be allowed to enter pay rates into the system. They process the payroll, but they don't enter the pay rates. Here, payroll enters the pay rates.
Oh.
Can you explain what can happen when payroll enters the pay rate?
You're muted, Kathy.
Have I been all this time?
You have been.
Oh, I'm sorry. I don't know how that happened. Okay. I don't know what I just said.
The question was what can happen when payroll's entering changes instead of HR?
Oh, did you hear that? Did you hear what I said before that?
Yes.
To Mr. Yusuf's question. Okay, I don't know how that
Yes,
switched
to
on
clarify.
to mute. Okay, thank you. Okay.
Yes.
HR, payroll staff can enter change pay rates. Which is not a good thing. They're processing payroll. They should not be adjusting or entering any rates of pay. They could actually adjust their own pay rates, and the concern is that that would not be detected because they're actually doing the payments as well.
Yeah. I don't have any questions about this. I have extreme concern about this, and I'm one of 3 on this committee, and I don't know that if there's anything for the committee to do, but I will say that I want this addressed and I want this changed, and I trust Superintendent Yu to do that in a way that, of course, will not cause harm to the district, but this can't persist from my perspective.
And, obviously we take it seriously as well. And this is not a good report card. So we're, sharing it with you as a not good report card. And we are going to talk a little bit about some of the structural changes. They don't get to the cultural changes that Kathy referred to probably, but there are some structural things that we are going to be moving to put in place in order to be able to respond to this. So, and maybe Kathy, you can start by talking about the response that is outlined for this particular finding, and then we can move on to the next one.
Sure.
Yeah, and as you move to that, I'd just like to comment that, I'm not trying to direct blame or shame with my comment. I'm just...
and it's certainly not
direct.
taken that way.
Okay.
Nope, certainly not taken that way. So our response was that the school department acknowledges the lack of segregation of duties, which has primarily resulted from gradual staff eliminations and current vacancies. And while vacancies have remained open, we've been working diligently to reorganize areas and redesign processes to allow for greater segregation of duties and strengthen the internal controls to identify and correct the errors and irregularities as they occur. So it doesn't always mean that you need to throw more people at something. It could just be a process change that needs to occur that strengthens the internal controls. So to have a good internal control system in place doesn't always necessitate adding staff. But if you want to segregate duties, of course, if you have one person doing everything, that's going to limit the ability to really make sure that things are strengthened. And then, let's just spend a lot of time trying to understand the current processes and the workflow design. This is a system that I inherited. And so just trying to understand before, charging in to make changes to the way I think that this should be working, understanding how the current processes and the workflow design is actually implemented here, and to try to figure out how to implement that and change it as things chug along. So what we always talk about is that the time doesn't stop while things need to be fixed. So we still have to continue to pay invoices. We still have to continue to pay people, but you can't make a lot of changes too quickly without testing them through and without seeing what the result's going to be. So understanding the current process and the workflow design has been critical, in my view, to making sure that we are heading into the right areas for process improvements and not creating additional issues. So embracing a culture of change are key, I think, also to successful implementation of these process improvements. And they do, as I mentioned again, require time to implement. And so to this end, we did hire a new accountant at the end of December, and I'm working very closely with that person to change some of the process flow that we currently have, and tighten up some of the processes that we have in place, and documenting the process so that we're consistent in how we do things, and improve our existing targeted processes. So there's certain processes that we've targeted for improvement, and those are the ones that we're working on based on the level of risk that's associated with these. And that's what we're continuing to do. So that, maybe in the past, I'll always give people the benefit of the doubt. The training didn't occur as it maybe should have, and want to make sure that new people brought in are properly trained to understand what they're doing, because if they understand what they're doing, then the success of implementing strong internal controls and not having things fall through the gap is a lot higher than if not. So we have changed. They didn't mention changes to the shared vendor master file that we have with the school, with the city. The city and the school share a vendor master file for our accounts payable processing. And it's our practice to send all those changes to the city as they've requested. They don't allow us to add new vendors. In other words, I couldn't set myself up as a vendor without going through the city process. And that has been our practice, and that we can't lock it down because we share, there's some things we just share. So you have to both be able to do that. But we have a practice in place that prevents us from doing that without communicating directly with the school. And we do acknowledge that the pay rate should be entered by human resources personnel. The training is going to be provided to HR personnel by our payroll staff, while we concurrently explore alternate payroll solutions. We want to see if we can get a system that maybe will be a little bit tighter in the internal control area and aspects, or see if there's something that we can do to strengthen what we already have in existing systems. All journal entries currently require appropriate supporting documentation and approval. They're all approved by me. That's been in place for quite some time. We did institute a new time and attendance system, and that requires supervisory approval. They noted that time and attendance, people's time cards aren't necessarily reviewed and approved. We do have a number of different methods. If everyone's not, I don't think everyone's transitioned to the new time and attendance system. And the ones that have not may not have appropriate supervisory approval, or we have to keep sending back for supervisory approval. So we're keeping an eye on that aspect of the system, the new system. And we have two solutions. We have two Munis systems. One does payroll, one does accounts payable. The one that does accounts payable we share with the city. The payroll one is not integrated with the city, and we have to do everything in two places. We have to set up all new accounts in both systems. It's very labor intensive, it's very time intensive, and it's not efficient. So we are currently exploring a payroll solution that doesn't require the use of two non-integrated Munis systems. Apparently, when we set this up, we were unable to process the school payroll with the Munis system that's shared with the city. because they processed their payroll on there. We couldn't, they're very dissimilar, and we weren't able to do both of them at the same time.
Kathy, just noting your in the letter and your comment that all journal entries are approved by you. Can you give me a sense of what that volume is? And is
it's not very heavy volume on these. Mostly journal entries are used to reclassify expenses. If something gets charged to the wrong account, you do a journal entry to reclassify that. We do a journal entry that uploads the payroll from the payroll system into the financial system that we share with the city. So that's a journal entry, and that doesn't get processed without my approval and having documentation uploaded into the system to support those figures. And I review all of that with the new accountant who's currently posting all of that activity. Anyone else? We don't have many staff that are making or proposing any journal entries. I make sure that I see any proposals for journal entries before they're even entered into the system. And then when they're entered into the system, they enter into my workflow, and I'm the one that approves them and makes sure that there's supporting documentation attached.
So is that a process improvement that's been put in place, recently, because it was a finding in
Yes.
the audit? So
Yes.
thank you.
Because part of the year that was the case.
And I'll just note now that I'm going to drop off, and I really do apologize. I know this is a very important meeting, and I will listen to the rest of the meeting this weekend and follow up with questions. I'll follow up with the superintendent in an email with additional questions. And I look forward to, in particular, to the conversation about the structural changes that Kathy, I know you've been working on to try to address the big picture takeaway of the audit with all of the detail that follows it. So I apologize again. I didn't realize the conflict, unfortunately, until late last night. I'm not sure how it happened, but sometimes too much is going on. So my apologies, and I will follow up. And thank you so much.
Thank you.
Yeah. Member Youssef.
Thank you, Chair. Thank you, Kathy. I just have a question about the staffing. Do we have difficult finding staff, or why we don't have many staff? Or is there a transition time? Or
I think it depends on the position. And I think we were trying to, or at least I was trying to on my end, understand the processes and make some process improvements before just bringing someone in, because we need to train them in the right way and on a corrected process. I don't really want to bring somebody in and start training them on a process that I don't feel is working well. So that the time has been spent more to try to update the processes or improve the processes, get documentation around how we want this to work, actually train and try to work through it to see if it's effective. And then at that point, we would advertise and try to bring in some staff. And in some cases, we've had difficulty attracting staff. But in most cases, I'd say the delay is a result of trying to implement some process improvements before bringing in staff.
Thank you. For the audit team, do they offer any training? Or historically, is there any kind of support?
Not typically, and it may be perceived as conflict of interest if they were to tell us how to do the accounting if they're auditing us. So typically, they would not. They may, this particular firm doesn't even have a consulting branch, but if they did have a consulting division of their audit firm, they would not be able to assist us with any of that because they perform our audit, but there are other accounting firms that do.
Oh, thank you so much.
Right. Are we ready to move on to the second finding, which is a significant deficiency?
I'll just say I appreciate all the acknowledgments that are in writing here and that you just walked us through, Kathy. It's clear that you're trying to do the right thing and move us forward. So thank you.
Thank you. Should I move on?
Yeah.
Okay. The second one is approve the timeliness of school accounting in the year-end closing process. So we couldn't agree more. This said that the school department did not perform interim reconciliations of key general ledger accounts, including retirement and health insurance withholdings, which contributed to errors being made and not resolved timely. So we noted that the year-end reconciliations continued 6 months after year-end. Specifically, the school department was reporting a $10 million deficit in a grant fund until December, when the requests for reimbursements from grantor agencies were recorded into the general ledger. So we understand the school has experienced turnover that could have contributed to this issue, and it did. But maintaining a complete and timely general ledger is essential for management to evaluate the fiscal year operating results, including accurate budget and actual comparison reports. So they're recommending that we ensure that the general ledger is complete, that our books are closed and complete and accurately maintained. On a timely basis, reconciliations are performed with adjustments posted into the general ledger, and then that allows us to really do an assessment too of financial information. And so we said the school department acknowledges the delays that have resulted from the lack of timeliness of school accounting and year-end closing process. Delay is primarily resulted from the current vacancies, but gradual staff eliminations and current vacancies, things have gotten shifted or dropped from being completed. We continue to develop and implement a plan for process improvements and efficiencies, as well as fill the need to account for the pandemic-related federal funding. So that's been a significant accounting, just an added aspect of what we needed to account for with the pandemic funding. And until all permanent positions are filled, we have hired contracted staff to help fill the controller and the grant accountant roles. And I've just taken an active role in process development and training and supervision of these roles, as I mentioned earlier. The contracted controller is currently training the new accountant with account reconciliations. We're bringing in some staff, some contracted staff to help us with that as well, as I continue to train the new accountant who just started. So he's still coming up to speed on everything, and to help us get our books in order so that we're ready for an audit much sooner than we were this last year. So we are acknowledging that we understand and are working toward improving that, and have been, and even before we receive these comments, and the auditors are aware of that too. We've worked, we've discussed this extensively with them.
Any questions, Member Yusuf?
I do have a quick question about so not closing the books on timely manner. Mm-hmm. Does that mean the amount is gonna overlap to the other budgeting, or?
No, it just means that it's very difficult when you ask me, like, how does it look like we're going to end the year? And I can do a projection that tells us what we're going to look like June 30th, or what I think we're going to look like June 30th. But then pretty soon after that, I should be able to tell you what the actual number is. And here, like this past year for the FY21 budget, we didn't have our books closed. We didn't have all our activity posted until well after June. So just because of staffing and some vacancies and everything that occurred, and we weren't keeping up with everything or able to keep up with everything throughout the year. Because honestly, if you're doing your accounting properly and everything's done every month, the year end isn't as much of an issue. It's just an additional year that you're closing. Additional month that you're closing June. And in our case, we had months to catch up on to get all the activity reported in there, so that we made sure that it doesn't impact FY23 or FY22. So everything from FY21 that relates to FY21 should be recorded to FY21 and not come into the FY22 budget. We want to make sure that, you know, the proper year is charged for those expenses and that we do that relatively quickly so the auditors can come in and audit it. And if we say our books aren't closed yet, they can't come in and audit anything because we're not ready. And that was the issue that we've had, I think, for the past few years at least now. And we're trying to turn that around for this year and trying to get ahead of that. But we still have a few vacancies, so we're still struggling a bit. But it's just learning where all the gaps are and what needs to be occurring and where we need to assign priorities to. And I'm trying to reassign some priorities to not only what folks think is the most important or the staff thinks are the most important in their area, but what I view as the most important and critical for getting the audit completed. So a lot of times people enjoy doing certain tasks and they like doing certain tasks, and others they don't like as much. And those are the things that don't get done quite, you know, first or don't take top priority. And that really can't be determined by what someone enjoys or not enjoys, but more based on what's the most important. And that's what we're that's all part of the process improvement structure too, and the part of the cultural change that I refer to.
Thank you so much. Thank you. Thank you, Chair Hunt.
I'm good to continue. I don't have questions.
Okay, yeah, thank you. The third one is implement prior year school department additional audit recommendations. So as opposed to them reiterating previous comments, they're noting just some highlighted things that they think are critical for us, and reviewing purchasing card transactions. So we have a number of purchasing cards out there, and we haven't had the staff to review the transactions and the supporting documentation that should be attached to that before we're paying the bills. We need to adopt a cash receipt policy, meaning how quickly and timely we deposit our checks that come in and record. We need to improve controls over the student activity funds. And we need to review accrued vacation for excess balances. So these are all areas that we've identified as deficiencies. The auditors have identified as deficiencies, and we're taking steps to address. So reviewing the purchasing card transactions against supporting documentation monthly. We're in the process of transitioning this review from accounts payable, who should be just paying the bill, to our new accountant, who should be reviewing the credit card transactions and making sure that all the appropriate documentation is supplied before recording all the transactions and paying the bill. In such a way too that if they're not attaching what the supporting documentation, the receipts that they should be attaching, they should have their credit card, their purchasing cards removed. They should not be allowed to continue using one. Adopt a cash receipts policy. With the hiring of the new accountant, we're redesigning the receipt process and working toward more timely deposits of funds. We requested a scanner through the city to facilitate more timely deposits of checks. So we just received our scanner today. We have to get that set up. We've also redesigned the recording of receipts to include more timely review and documentation. And improving controls over student activity accounts. Right now, the new accountant's been assigned the review of student activity funds and policy management. We've replaced this one staff. I understand I keep saying this new accountant. So we have replaced this one staff with multiple assigned duties, and we recognize that we're going to need some additional staff in addition to the new accountant to really implement and maintain these additional improvements and internal controls on a systemic level. At least this one person is not going to be able to do all of this, but we have started and we've got processes in place to implement some things. But to take a deeper dive into some of these areas, we're going to need more than this one person. And then we're currently researching the issue with our vendor to facilitate correction of accruing balances, vacation balances in excess of what they're allowed. So this is something that I think might be related to our payroll setup, and we're exploring that as at the same time that we're exploring an alternate payroll solution.
Thanks, Kathy. You have my support for all that you just covered. Member Youssef, any questions before we move on?
No, I'm okay. Thank you, Chair.
Okay.
Thank you, Kathy.
And the remaining comments I can review, but those are related to the city specifically. So we did not respond to those.
I think in service of time in our agenda, it would be best to leave that for our reading outside of this.
Thank you.
Thank you.
I think just to point out that this is a joint audit of the city and school districts' budget and financial operations. So they're all, in a single report, but the first three are pertaining to us, and then the other two are pertaining to city. So, that we don't really have the information, or is it really the purview of the board to engage in those? I do just want to point out that this last finding, the significant deficiency around the implementation of prior year recommendations, those particular issues were not considered significant deficiencies before, but the fact that they've continued and have not been resolved is what has elevated them to significant deficiencies. So I think you know that, but I just thought it.
Thank you. Thank you. Yes.
Thanks. And understanding we're about to transition, I think my last question is, I've heard several times that this is going to take time. So Kathy and Superintendent, from your perspective, when is reasonable for this committee to hear an update on these items and to see if there's changes related to these concerns?
Well, we're gonna move now into to talking about some of the structural changes. So I think you heard already that there are changes being orchestrated now. So I want to talk about the structural changes, and then I do think it's appropriate for the committee to sort of set an expectation around obviously we're going to start the audit. Technically, the audit starts, in July. We're not ready to go into that, into the audit at that time last year. And so, for us to update you on where we are with the audit on an ongoing basis is probably an appropriate measure. But I think we should talk about that in a minute, because there are structural issues around how to do this as well.
Fair enough. And just in case time becomes an issue as a placeholder, I'll just say at our August meeting, we should hear an update, particularly as it pertains to the closing of the books and the beginning of the audit. And over to you to move us forward, Superintendent.
That's fair. Yeah. Okay. So what I wanted to do next is to walk through some initial thinking that we've done, Kathy and I, with her team, around some of the structures that need to be implemented in order to facilitate making these changes. And so I'm going to share my screen and walk you through the handout that was a part of the packet. So. It's not it. Here we go. Sorry. So there's the first page is a staffing history for the finance department. So we went back all the way to 2013 and pieced together what staffing looked like at different points along the way. So you can see that, in 2013, there were 11 and a half positions that we devoted to the district's finances. And over the years, as Kathy, mentioned in her response to the audit, that's been, sort of trimmed to where since, 2019, we've been down to 9 FTE in the department. So, that's almost a 20% reduction in the staffing in that department. So it's a fairly significant shift. This sort of has a level of detail around what were the different positions. And I don't know how deep you want to get into that to understand what they are. Some of those positions have been phased out. Some of them have changed titles and things along those lines. But it's not super important for you to understand that. We're going to do that in a minute around the actual current and proposed structure. But before I do that, I don't know if you have any questions about the staffing levels, the history of those changes and things along those lines. So,
no questions for me, Member Youssef. No. Okay. Onward.
So then what we have here is the current staffing structure, which you see here. These are the 9 FTE. As you can see, there are 2 vacant FTE in here. And, we only recently, as you heard in the audit discussion, filled the accountant position. So that is, it's a recent hire. So for the better part of a good while now, there's been significant level of vacancy. So, down roughly a third of what's already a reduced staff. So there's no question that has had an impact. As you also know, we've had significant influx of federal funds, which has necessitated, significant amount of work on the part of the finance department. So we have tapped our federal funding to be able to support the functions and the sort of the processing and managing of those funds within the current department, but not by giving it to existing staff for the most part, although there's obviously, there's only one person who pays bills. So anything that is, processed that way. So just to really work with the management of the grant, we've hired temporary staff, but there's been added work to the folks that are within the department. But, you can see what the current spending, this is an approximation. It's not a full, the full detail. And then this is an approximation of what we've spent in that project, the federal fund contract management and organization. So that's our current structure. And then this is the structure that, in talking with Kathy and some of her team, we believe needs to be in place in order to be able to tackle the many challenges that we're facing, including the continued management of significant federal resources, but also the sort of the findings that you saw in the report. And so I think there's nothing that is sort of being phased out or discontinued. There are just new positions that are being proposed here. So one is this position of a purchasing manager. The other is the grant accountant position. So that would account for the 2 new positions that would bring our FTE back to close to the sort of the like what was, through 2017, we were roughly in that neighborhood. So I think that brings us, back to that level of staffing. And there's some additional investment that we're proposing to make in the sort of the temporary management of the project, which includes a project consultant. So that is primarily somebody to help with some of those, to manage the process improvements that Kathy is talking about, things like, looking at different incorporation of different payroll structures, modules, the potential outsourcing of, some of our current functions and things along those lines. So it would be more of a project management type of role, and then a temporary accountant to support the work that is happening in the department. So those are the additional investments that we believe that we need to make in order to be able to manage the transitions associated with those process improvements, as well as continuing to manage the federal funds. And then the last section here shows you what the envisioned structure going forward, at least through 24, when we still have the federal funds to manage. And so that continues, the FTE structure continues to be the same. The only thing that's different is a reduction in the level of support that we would be tapping federal funds for. So this is, based on, Kathy's sort of analysis of where we are and, our conversations along with, some of her advising staff. This is the structure that we're preparing to move forward with, which I think is important for the board to understand that, we are in the process of getting our budget approved. And I don't feel great about the fact that we're here, asking for these additional positions that are, intended to be continuing, but we're going to have to fund them for this year using federal funds. So in addition to the expenses that you see here, the continuation of, the project, the grant management support that Kathy has been, bringing in to help them manage those grants, the project consultant and a temporary accountant, in addition to the amount needed to get us where we need to be on the FTE costs. So we'll have to use federal funds for that. But in FY24, I think, the headline, I guess, from my perspective is expect that you will see an addition to the budget for the finance department to be able to maintain this level of staffing, and it can't continue to be federally funded into the future. So that's what I wanted to share with you. I don't know, Kathy, if you want to add anything to that.
Only that this isn't just putting positions to an issue. It's trying to really resolve some of the systemic problems that we've got just throughout the district with our processes and within the finance department. So, I am currently putting in over 80 hours a week. And so I'm not looking to divert any of my time to other staff by increasing the number of FTE. If I could do this all without the FTE increase, I would do that. But I've been trying to do that for like about a year now, and I'm kind of maxed. So thank you for considering.
Yeah, I'm sorry to hear that, Kathy, that's the level of work that you've had to do, and that this doesn't even change that for you yourself. It's not what I'd want for any of the people in the district, except for maybe the superintendent. But no, I jest, but I know that's even harder to escape as well. I do have two questions, but first to Member Youssef.
You can go ahead, Chair.
My first is a clarifying question that you're looking at about $600K to come from federal sources for the coming fiscal year. Is that correct?
That's correct. And 400 was already being used in this year, right? So
Okay, so it's a 200K delta between this year and the coming year. Okay.
Yeah. And it's a continuation of that cost plus an additional roughly 200,000.
Okay. And the next question, I have lots of, I wish it isn't a question I would even think should be asked, but I do. I'm not going to go into my rationale right now for time. But has it been explored to outsource this work?
To outsource the finance department or to outsource the response to the audit? Or?
Essentially the finance department. Hearing the level of work that we have to do and looking at a $1.3 million budget, just curious, between the systemic issues, the cultural issues, and knowing that there's entities that obviously have processes in place already. That we would need Kathy or some staff that would help interface with an outside entity. But I have to ask the question to due diligence.
So as I'll take a first stab at that, Kathy. And, the reason that we're adding this project consultant is to help to investigate and manage the due diligence around outsourcing aspects of this. And I think, the one that we, think is probably most ripe because of the fact that it's, widely outsourced and, there's a large number of people that do that type of work is payroll. And so, there is we are exploring the potential for outsourcing different functions, and that would be one that we would do our due diligence around right away. I don't know about other functions that could potentially, I don't know if is there an accounting thing? Is there a accounts payable? I know we've, started a conversation with the city about, transitioning our accounts payable to the city. And, the city rightly is managing their own staffing shortages and is not in a position to sort of take on a new staff person and all of the responsibilities that goes with that. But so that's, and that was a direction that the schools and city pursued very actively at the turn of the previous decade. So after the 2009 budget problems, there was, a concerted effort to try to consolidate the, functions between the city and the school system. Like facilities was consolidated when I started, things along those lines that have since, sort of just split off, and they are separate. There's a separate department for each of those. But so I don't know, Kathy. That's my sort of barely informed perspective on those other, so accounting or things like that, accounts payable, purchasing, things like that.
I think you're spot on that. I think the most viable options would be accounts payable and payroll, and then we would probably just want to keep doing what we do best in finance pertaining to education in the schools, which is around the grant reporting, which is very specific to the school department. We have a lot of grants, and that is specific to us as opposed to the city, and the budget function. And you could certainly just keep the budget function at the school department and outsource probably the rest if need be. But I think there are some things we do here better than others, and I think that's what the proposal is, to continue to explore those areas where we're probably not at the top of our game.
Yeah. That's helpful to hear, and I appreciate the assessment of what could be pulled apart. I just support getting this into a different place. My term's up this year. I hope to be here again, but I can't imagine being in this meeting again a year from now and being in this place again. So I'm just kind of leaning all the way in to support getting us to a different place.
Yeah, I appreciate that. And, clearly none of us wants to be in this situation. I think it's
absolutely,
there's a diametrically scaled up level to this audit that, I think in fairness to Kathy in particular, that, we didn't spend a ton of time talking about the fact that, we have a new auditor, but that the previous auditor, basically did not have the capacity to do the work that they were trying to do at the scale that they were trying to do it. So they decided to downsize their client list, and we were downsized as part of that. And in the process, they also, just didn't spend the time in that last audit to sort of look in depth at things. So these things predate Kathy. They're not, something that has happened during her tenure. And I just want to make sure that that is clear. But, they have happened during mine. And I do want to, I take responsibility for, for the fact that they've happened. And I want to take responsibility for suggesting, ways to change it and improve it.
Yeah, I clearly hear that nobody is okay with this and everybody's trying to make it different. I'm just trying to make it clear. Yeah. I just don't. I've said enough. Member Youssef, do you have questions?
Yeah, thank you, Chair. I just want to echo what you said and appreciate the amount of work that Kathy put, and appreciate the superintendent and how you guys envision how we're going to get out this. So the one question, the temporary grant account, are you making that a full-time, or that will remain the temporary and then we will have a new?
Yeah. Right now, the temporary accountant is actually just for the SRF grants, SRF 2 and 3. So that's 26 million that they're managing currently. And actually, we brought them on when we only had SRF 2. We didn't even have the SRF 3 award, but they're trying to manage both of those now. So that's enough for one person to manage those two grants. The grant accountant that we're proposing would do, would be all the other grants that we have. So they would do, the temporary accountant would stick with the ESSER fund, the federal funding that we have most recently, but then going forward, we'd have a grant accountant that would account for all the local, federal, and state grants that we have that need attention.
Yeah, great work. I'm in support, and I hope we attract people who are willing to do this job. Thank you.
Thank you.
All right.
May I return to my questions about timelines and checking in?
Yeah.
And I know there's another item that we're going to try to get to. I just say that I'll hold to what I said before, and I look to Member Youssef to affirm or say otherwise. But August to hear initially, where we're at with the closing of the books and the beginning of an audit. And then I think at the end of the year, maybe it's part of, the new board in December and a new committee forming, but hearing your honest assessment of how we're tracking with this, these changes, and if we're on track to see the change we want by the end of the fiscal year, or if we need to make a change, in the beginning of 2033 to get us on track. That's what I put forth as a kind of accountability timeline.
What is the December? What is the December?
December would be to get your update on how things are going with your updated team that you just walked through with us. Is it delivering the results and the changes that we need to see in alignment with this audit and just best practices? It will be a little squishy. Obviously, there's the hard benchmarks of what's in the audit, but otherwise it'll be your determination what you report back to us of kind of what's going well and what still could be better. But ultimately, I'd want to know at that point, are we on track to get to the there of the issues in this audit being addressed by the conclusion of fiscal year of the upcoming fiscal year? Or are we not? And if we're not on track, then I would want to hear your recommendations for what we do different beginning, January of 23. So in the remaining 6 months of the fiscal year, how are we going to get to where we should be? That's what I'm proposing, if that makes sense. And
yeah, and Kathy, correct me if I'm wrong. The audit, the FY22 audit, assuming that everything were to function the way that it should, right, would probably be completed around that time.
December, yes.
Yeah. And so at that time, it would, it would be an audit of the FY22 and the sort of the district's ability to staff and, close out the FY22 school year and, effectively work with the auditors through the audit process. So there should be some level of indication in that audit report that, there is there's signs of hope and things along those lines. And so I think my point is that you should also be looking at, not just our assessment of it, but also looking at at the auditors that are there to do that for you. I mean, that's ultimately why we have an external audit, why it's built into the, statute to have that, is to give the governance body, an external, because we can come and tell you in December, January that everything is going, awesome.
Yeah, of course, we want that external perspective. It's how we know that how we're doing. But perhaps to my detriment, I hope you're also hearing that I have extraordinary confidence and trust in the two people on the call right now, as well as your other staff superintendent. And so I do put a lot of weight in your own assessment in addition to that external.
I appreciate that. And yes, I do hear that, and I appreciate it. So.
Member Yusuf, anything from you before we try to sneak in one last item?
I'm good. Thank you.
Okay. And I don't mean to put pressure on you to not have anything to say by saying it's okay. Thank you. Thank you, Kathy, for walking us through.
Okay. This next item is it's a pretty it's a fairly complex one, but I am going to just hit the highlights on this. So the big idea is that, as you know, we have for the past couple of years through the pandemic been able to have all of our meals reimbursed, by the federal government. So anybody who took meals, we were reimbursed for those meals. We expect, it's not confirmed, but all indications are that starting very soon that they'll revert to the traditional way in which the reimbursement for school meals happens, which is more money for kids who qualify for free and reduced lunch, and less money for the kids who qualify as reduced meals, and then very little reimbursement for paid meals, because the expectation is that people are paying for those meals. So there are significant impacts to having to return to that really sort of have to do with our things like our ability to move kids through lunch lines in ways that are efficient and quick, and also remove the stigma of having to enter your code and things along those lines, which we would have to do. And so there is a process which I don't know if you're either of you are familiar with, which is the CEP, I can't even think what
community eligibility program.
Community eligibility model, the community eligibility program, which, sort of, if you are able to qualify for community eligibility, everybody in the school that eats a meal gets reimbursed at the free and reduced lunch process. Or not everybody up to what your eligibility number is. And you don't have to collect forms. You don't have to do any of that stuff in order to be able to fully fund, to be able to do that. So we've been looking at where we stand, and the state has now put in a program that will reimburse the school districts for the difference between the free priced meals and the free priced meals. So they'll basically make up the difference. And so there's no penalty for us to actually have a program where everybody is able to, so that we don't have to collect all of the forms and do all of this stuff, and be able to get our, to be able to get reimbursed for a larger number of meals, not have all of those impediments to kids accessing meals. And so in our plan, we intend to not just only continue with the 4 schools that are currently CEP, which are East End, Presumpscot, Reiki, and Talbot, but also add another large number of schools. So we think, that in the way this will be one new application, the totality of the schools have to come up to a level that that meets the federal threshold, but we can do that and add Moore, Rowe, King, Deering, and Cliff Island School, which then leaves us with Lincoln, Casco Bay, Lyseth, Longfellow, Ocean, Peaks, and Portland High School that would not be in the CEP. So those are schools where we would continue to need to collect forms and do all of those things. We are still working on a couple of those schools to see if, some of the cleanup process that we're doing in sort of back office cleanup processes can get their numbers up where they would still be able to fit into our CEP application. So we think that we might be able to get Lincoln and Casco Bay into the application. But then the other part of this is that there is another program that's called Special Provision 2. And under Special Provision 2, we would need to collect forms only this coming year. And the premium would be on getting as many students as we possibly could to turn in those forms, because subsequent to that, that number, whatever it is that we come up with next year, would be our free and reduced lunch number for the next 4 years, which in our case, our data, for a number of reasons, our data is trending down at every single one of our schools. And so, the goal would be to lock into the higher number now. And then, subsequent to that, just, not, we wouldn't be collecting forms. We would just collect them next year. The big downside to doing any of this is, obviously by removing the collection of lunch forms, we do not have there's a couple things. We don't have reliable free and reduced lunch population that we can use, like at the student level, to do analysis of any kind that we traditionally do in terms of how students are performing, how students are being disciplined, things along those lines. So that would be missing. There's a potential, and this is a lobbying opportunity. There is a potential for significant decreases in EPS funding, where there currently is a I'm sorry. Where there currently is a there is a multiplier for free and reduced lunch count. And so, we've got a proposal to go to the DOE, to go to our legislative delegation for using the CEP count and then income forms, which we do collect for students at the schools that are CEP eligible, and using that combined number as opposed to using just the income forms, because we don't think that we will get anywhere near the number that we currently have in those buildings. So we would want to work with the legislative delegation on that issue. So that's a lot. I actually have a PowerPoint. I didn't load it on. And now that I'm just, trying to figure out how to do this in a reasonable time, I decided not to go through the PowerPoint. But, again, the idea is that we want to try to get as many of our schools locked into a program that allows us to not have to collect forms, do all of the punching of numbers that we require kids to do. We think that it will increase access, and it will increase the decreased stigma. So therefore increasing access. And we are, we believe that we will be able to mitigate some of the negatives, with some of the, with lobbying and with other, forms of identification as a way of doing this.
Thanks for giving us the speed racer version of all that information. What are you looking for from us this evening? Just for us to be aware, or?
It's an FYI. We, in the past, we've come to the board for CEP because there was an expectation and understanding that there would be a cost associated with that, because anybody who, any meals that were not reimbursed, in the CEP schools and where, parents didn't pay, we would, have to cover the cost. And so that was, as you know, or you may not know, for a few years, there was always a big deal of, people coming in and, and paying to offset the, the free and reduced lunch debt, at, or the non-free and reduced lunch debt was really what they were offsetting in schools. And then at the end of the year, for a couple of years, we had a $25,000 to $40,000 expense that that the budget had to pick up. That's removed now with with the state program that covers that difference. So nobody is expected to pay. That is it's a free lunch for all students, and we get reimbursed the full amount that up to that level. So so there's no financial implication. So it's more of just making sure that you understand, and we will be coming back on the legislative angle on this to work on, sort of working with a legislative delegation and so on.
Thanks for telling us what we need to do with it, which is just be aware. If the presentation is something you think would still be useful to us to understand, please upload it to Board Docs.
I will update it into Board Docs and let you know that it's there.
Okay, thank you.
Yeah.
And then, there's still, there's more. Yep,
there's more. Good. The last item is really just an FYI that the city moved forward with an upgrade of their of the city's sort of connections, the internet connections, all of the switches, doing some redundancy to ensure that they're, that we continue to have service. And there's a portion of that we need to carry. We did not know about it, so we didn't put it into CIP. I've been working with Gavin to determine whether there's enough money in what has been allocated in his budget, both out of general fund, as well as some of the federal funding that was allocated for, out of ESSERF to for the reopening of schools. And he believes that there is enough to cover our portion of that. So if there isn't, then we will need to come back to you. And, if there is a contractor, something that exceeds the procurement amount, we'll have to come back to you. But I just wanted to give you a heads up and an update on the fact that we're going to be doing that. Obviously from a service perspective, those are really good and important things to do. And, we just didn't have enough of a warning to include it in CIP and budget it. So we're doing that now.
Okay. Appreciate the update. Member Youssef, I've been encouraging us to move quickly because I like to end committee meetings on time, but I don't want to prevent you from asking any questions that would help you with this item or the one previous about the community eligibility. So just want to look to you for a moment.
Yeah, thank you so much. I don't have any additional questions. I just want to say thank you for updating us and giving us head up. And we will see when you post the presentation.
Yeah.
For more questions.
Yeah. Thank you for the thorough conversation this evening. I appreciate all of that and all that you're doing. So with that, nothing else from you, Superintendent? No. Okay. Member Youssef, you okay with ending the meeting now? You gonna move that? Okay.
Yes.
Move it accepted and we'll end the meeting. Kathy and Javier, just thank you. And please take care of yourselves. Get some rest.
All right. Thank you.
Thank you.
Thanks
You
so
too.
much. Thank you.
Thanks. Bye-bye.
Bye.